Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. As always, we need to cover off some important housekeeping details about the session, and then I'll introduce Rob. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. Well, the market made a nice move today, which was surprising with the Fed rate announcement tomorrow. So I wonder what that means for the markets moving forward. Interested to hear Rob's thoughts on that, and also very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour. That's Rob Roy.
Thanks, Zach. Welcome, everyone, to this week's TradeFinder Live. Go ahead and turn the camera on. We'll take a look at charts of the market. Interesting thing here before we really get into it. You can see that gap up today, as Zach was mentioning, and it's a little bit surprising. Maybe the market feels like they have a pretty good idea what's going to happen tomorrow, but I think there's a tiny bit of doubt on whether or not the Fed raises 25 basis points or does nothing. There's some arguments both ways on the financial networks. We heard they were pretty much split on that. I think the 50 basis point rate hike that was pretty well big. I think last week I said it was at 85%, and usually when you get that high on the Fed fund futures that close, that's normally what's going to happen. Well, normally you don't have major banks fail after that, which certainly changed things. So will they go 25 basis points? Will they say we're going to wait a little bit? It's going to be interesting to see. I think the market seems to be comfortable with whatever they're viewing that the Fed is going to do. I want to walk this back one day, which is one thing that's really cool that you can do with this software. By the way, if you're not used to this, if you're a new viewer, welcome on all the different live streaming services, social media. It's a software called Profit Source, and you can find out more about it at hubb.com, hub.com. To me, it's the best Elliott Wave software that exists, but even you can see that there's no current 5-wave impulse pattern on the SPY. It would go into corrective patterns, which will label if you want them to. I turn that off because I like the tools to label them manually. But when you take a look at this, this is an alert that I wanted to send out to our subscribers yesterday, because you can see this symmetrical triangle pattern that the SPY is in. It's a pretty nicely formed symmetrical triangle. I think you could make an argument. I'm going all the way back to the lows in October, but I think one could make an argument that that's not a symmetrical triangle. That's a descending triangle utilizing that support at 380, which if you've been listening to anything we've talked about here over the last couple of weeks, you know how much emphasis we've been putting on the fact that 380 needs to hold for any further potential upside. So whether or not you want to draw it from the October low and make it a bit more of a symmetrical triangle, or utilize the support level at 380 and make it a descending triangle, there's no question that the market is consolidating and in a triangle formation. And when you look at the ADX, it's hanging around in the low end of the range, about where you would want it to be for a triangle, with the VIX a little bit elevated, although it did come all the way down to 21 today. We'll take a look at the chart of the VIX in a minute. But I wanted to put on a triangle on the SPY for our alert subscribers at ewotrader.com. However, it was just too expensive. And in order to get it within the risk parameters that we operate in for our alert service, you would have had to go so far out of the money. We like going a bit out of the money so that we put the Greeks in our favor, delta and gamma, but you had to go too far out of the money, and you get too far down the delta curve. You need too much of a move before you can start going up the vertical part of the curve. It just didn't work. But it's a shame, because I feel like either one of those patterns looks pretty good. So then you would have to look today and go, boom, is that a breakout day? And I think regardless of which triangle pattern you drew, you could call that a breakout day. But does it really matter in front of the Fed meeting day? You all know, if you've listened again, that a breakout in one day means nothing. There's a number of head fakes that occur in the market, and you need a second day of follow through or a confirmation day. So if we can close higher again tomorrow, then I think we'd say, yep, we have an upside breakout and this big zigzag pattern that we've been talking about for a very long time still is very much intact with just so many complex patterns in here in this C wave. Looking at this big flat, looking at this zigzag to the downside that hit the 100% extension spot on that we talked about last week. So I don't want to rehash everything that we did last week. You can watch these recordings on our channel and see all of the stuff that we drew last week. So I just don't want to waste time tonight doing the exact same thing we did last week. I don't like the gap up. Again, if you have been following us, I'm a believer that gaps get filled. Statistics say 94% of all gaps get filled. The question is when. Sometimes it takes a while. Sometimes they get filled immediately. You would think with potential volatility that normally occurs around a Fed announcement, we could have a wild day tomorrow. We could move down enough to close that gap and still finish to the upside. So that's the only point of concern that I would see right there is that bit of a gap. The 10-day moving average is curling back to the upside, and with this gap up and move higher today, we are back above the 10, 30, and 50-day moving averages, all those major moving averages. So even with this completed downward zigzag that occurred, the upward zigzag is still intact, and the potential for it to go up and hit that target is still a possibility. Again, you can see how that downward hit that 100% level spot on. So that's the power of Elliott wave in these Fibonacci ratios. So all eyes are going to be on the Fed tomorrow. Not so much what they do, but what they say is what a lot of the chatter has been on the financial networks. What is their commentary going to be with the fact that we've had these bank failures? Now, one thing that's occurred is the Fed's balance sheet has expanded. This is not QE. A lot of people have been saying, oh, we're back into QE because the Fed's balance sheet has expanded when they were supposed to be going through a contractionary period. But the fact that they've opened this new lending facility for banks has expanded their balance sheet because banks have taken advantage of it. So you could make an argument, well, in that liquidity, that's, you know, money going into banks that they could then lend. And if the banks choose to lend it, that does put it out into the economy and out into the markets. So yeah, you could make an argument that it's a quasi easing, but it's not the exact same thing. They're not actually going out and buying treasuries or buying bonds is what they normally do when they're creating QE, quantitative easing. So it's a slightly different mode, although it has the effect, if enough banks take advantage of it and then they lend that money, that is adding liquidity. So, you know, just we're going to have to wait a little bit to see how many banks take advantage of it. The concern to me in the markets, the negative, is the fact that, is that it? I mean, it just doesn't feel like that's the last shoe to drop. Once all this stuff is unwound, et cetera, and yeah, you know, the UBS buying of Credit Suisse, First Republic being bought, all these things are good to help shore up those banks. But couldn't there be other banks that are out there that are struggling if these banks are? The thing to me, and I don't want to get too much on the Fed tangent. I did this last week. A lot of you commented about it. But just the fact that how the Federal Reserve didn't feel like this was coming. Of course, everybody's on the bandwagon now criticizing them, but to raise rates this fast put all these banks off guard. It caught them off guard. It caught them cross-footed, if you will. And so, you know, it seems like with the Federal Reserve being made up of bankers, they should have understood the ramifications of what they were doing. Why wasn't this facility opened already before SVB, before Signature, before First Republic? That hurts credibility, doesn't it? That these bankers didn't realize how banks operate and raising rates so fast. If there was any kind of a scare, which is what happened with SVB, you know, there's been questions of they did some risky things. So you could pick on them for doing that, but you could also make the argument that without this massive rate hike, so prices on bonds, et cetera, going down so significantly. And then any sort of all SVB did was say, hey, we want to raise some capital to shore up our balance sheet. And it scared everybody, and everybody ran and started taking money out. And Silicon Valley, some of the startups out there were saying, hey, go get your money out. And that run on SVB, forcing them to sell with bond prices so down, is what created this. And then we get Wednesday of last week when Wells Fargo said the exact same thing. They said, hey, we're going to raise capital in order to shore up our balance sheet. The exact wording that SVB did, and they got a pass, no harm, no foul. So from a conspiracy standpoint, you have to wonder, is the Federal Reserve doing a bit more than just expanding their balance sheet? Are they actually in buying the SPY? And before you say that's ridiculous, it's happened before. They've done it before. So when you look at this kind of volume that's going on, and granted the last couple of days have just been above average volume, but you see all this going on, it does make you wonder. There was a time when we had what we called the Fed put, where the Fed actually admitted they were buying the SPY, going back to 2008 and 9, back in the great financial crisis back then, trying to stop the market from the free fall that had occurred during that time frame. So it's not unheard of that they might be doing that. My point is that I think we're still caution. Things feel better. Last week during the TradeFinder, I said what the market needs is a couple calm days. We need a couple days without any sort of big negative news. And that would help things a lot. And it didn't work that way, did it? You know, we got the news of First Republic Bank, and then Wells Fargo, who again got a pass, it seems. But now to start this week, there has been calm. And so we'll see if that changes tomorrow with the Fed announcement. But breakout to the upside today. We'll see how that plays out. Let's take a look at TNX for interest rates. And when you look at that, again, no 5-wave pattern. I think this is a positive. Rates moving back up today. That means money was leaving the bond market, because this big vertical move down here was money flying into the bond market, prices going up, yields and rates going down, to escape the almost panic in the equities market. We didn't quite get there because enough things were done over last weekend, or the weekend before, and anytime any bad news has kind of come out, there's been things to occur to calm a bit. But that's why rates went down there, and a little bit of a move back to the upside in rates today, to me, is a positive, so that we could show that money was comfortable enough to leave the bond market and go into the equities market. So whether or not the Federal Reserve is in buying the SPY or not, some money did leave the bond market and go back into the equities market. So we can look at that as a positive. I also think this is a positive as well, that dollar and that 5-wave pattern to the downside that we've talked about, just a well-structured 5-wave impulse pattern to the downside, the dollar moving down, helpful for companies, for balance sheets, etc. And as you know, if you've been a long-time viewer, that I'm good with the dollar as long as it stays above 96. In fact, the dollar coming down, I think, is a positive. I like a strong dollar, but not as strong as it got. That was too strong. We don't want that. And the fact that global money has not gone rushing into the dollar with everything that's going on. So there really was no global panic over this. So you've got a few factors that have come together to calm the markets just a bit, allow the markets to have that move to the upside today. Can it hold tomorrow with whatever the Federal Reserve says? This will be one of the more watched meetings. This would have been just kind of a, before the whole SVB news came out, it was going to be a 50 basis point rate hike and maybe another 25 at the next meeting, and then a pause. Is it just going to be 25 basis points and then a pause? What are they going to say? As much as whatever the announcement is on the rate increase or lack thereof, it's going to be viewed on what Chairman Powell says. Every word will be dissected again. as we talked about when he was testifying in front of Congress, which was a pretty wild trading day. We may have a wild trading day tomorrow, but I think there's positives out of the interest rates. So the bond market is helpful, the dollar is helpful. Those things are all very constructive. And then you take a look at the VIX, and I'm a little surprised that not yesterday, but today, that the VIX came down this far a day before this anticipated Fed announcement. It obviously, volatility came down as the market went up. That's how it usually works, as you know, but I wouldn't have been surprised to see it maybe not drop quite this much, with a little bit of uncertainty left into whatever Chairman Powell says tomorrow. But it could turn and go right back to the upside. You can see that we did break below the 10-day moving average on the VIX, trading right around the 50-day moving average. And before you say those things don't matter on the VIX, yeah, it does. The VIX is a chart pattern. So when you're looking at technicals, it matters regardless of what the security is, in my opinion. So we'll see what happens tomorrow. Normally, it seems like it's been working out that when we do our insiders meeting on Thursday night, which is a full meeting that we do for all of our alert subscribers, and it's alert subscribers only on Thursday night. We do an extended Q&A, etc. And it just has seemed like Thursdays have been really weird days that make Friday an important day. And I get caught saying, well, tomorrow, whatever happens tomorrow is going to be important. And, it's almost become humorous with our subscribers. Now I can say that tonight on TradeFinder, that I do think how the market reacts tomorrow is really important, and will likely, barring some crazy thing that happens on Thursday, tomorrow's market action will be more important than Friday for a change. So you're getting your turn of saying tomorrow's a really important day, and then we'll see what happens. So now let's take a look at the rest of the markets. And if we go and take a look at the DIA, looking at the Dow, you're going to see a tale of different patterns here. Putting the Elliott wave pattern on there has just relabeled from where it was in a downside pattern. So if I walk it back, watch this, look at that. So there was an upside pattern there. And then you move forward, there was a downside pattern, and now it has completely relabeled to nothing. That's pretty rare. That usually doesn't happen, that you get two relabelings that fast. So I've had some people make comments on YouTube saying, this frustrating when the Elliott wave pattern relabels. Well, first of all, that almost never happens, that you get two relabelings that fast. Extremely rare. I've been trading Elliott wave since 2001, maybe a handful of times over that 22-year time frame. I've been trading for 27 years, Elliott wave for 22 years, which really, I was freaking me out today when I was thinking, I've been trading for 27 years. That's a long time. Makes you feel old when you start thinking about that. But it just doesn't usually happen like that. And people will say, well, that's what's frustrating about Elliott wave. I look at it the exact opposite way. I think that's what's great about Elliott wave. So many indicators are lagging indicators, and it takes time for the indicator to catch up to changes in the market. The market is dynamic. It's not static. The market's ever changing and ever moving. And you need indicators that are willing to or able to move with the market that fast, because you don't want to get goofy footed for you surfers and snowboarders out there, like the banks have with this interest rate rise. So you want an indicator that can change or spin on a dime just like the market does. I think that's the great thing about Elliott wave. You got to be able to change your tune quick. You can be bullish one day, and if the market changes, you better change with it. If you need to go to the downside or get out of your, whatever you need to do to adjust, you need to be willing to do that, and have an indicator that you trust, that gives you a guidance of what to do. And I think that's the strength of Elliott wave. So let's take a look at the Qs and see how they're looking. You can see that hammer doji there. What does that mean for the Dow tomorrow? We've been talking about this. We talked about it last week. The Qs look great. Yeah, I mean, that is a well-constructed five-wave impulse pattern to the upside, and we surmise we have different patterns. Now the Dow and the S&P agree. So before we had the S&P in a corrective pattern, we had the Dow in a downward pattern, and we had the Qs in an upward pattern. That kind of discombobulation occurs, but it doesn't last. The markets usually get in sync. Now they're different stocks, so they're not the exact same patterns, etc., but they're usually fairly in sync as far as are they going up or down from a general standpoint. So who's the leader is my point. Which of the markets is the leader? Is it going to turn out that the Qs are? Well, they have been. And if interest rates are going to stop going up, and that's what was going on with the Qs. That's why they're in an upward pattern, is the Qs were looking forward to the end of the rate hike cycle and the eventual rate cutting that we all kind of think is going to occur. The Fed Fund futures as well just pushed it out a little bit further. And now it's still, as I said in the opening, with the Fed expanding their balance sheet, it's unclear how much of that liquidity will make its way into the markets. But if it does, that's beneficial for the Qs as well. So you could make a good argument that the Qs are the leader and that the other markets will line up and follow. And that's a positive for everyone that wants the markets to move to the upside. We're a little bit overbought here from the 10-day moving average, as you can see. So based on that, the gap up in the SPY, it could be some craziness tomorrow, and then even close lower tomorrow to get back to this 10-day moving average and not affect this upward pattern at all. So I can't wait for tomorrow to watch what happens from an intraday standpoint following the announcement and then Chairman Powell's press conference. So here we are with the IWM, and also has relabeled out of its five-wave pattern. So the only one that's in a five-wave pattern is the Qs. So we have the S&P, the diamonds for the Dow, and the IWM for the Russell, all in corrective patterns now. The only one in a five-wave pattern being the Q. So again, if that's the leader, then we're in good shape if you want the markets to go higher from here, as crazy as that may be to believe. I did hear somebody else say something that I surmised last week, that it doesn't make sense for the markets to move to the upside right now with the fear in the banking system, etc. But that could be just the reason for the markets to go higher. We've created enough fear. We've created enough doubt. We've created enough sellers that not everyone is on the bullish train anymore, and they're not. And that in itself could be a reason for the markets to go higher. Bottom line here on the IWM, we held 170, another gap up, and here's a gravestone doji, so that's not what you want. So now we have this looking here for, could we bounce from 170 and head up to 190? Perhaps we get a little bit of a bounce back tomorrow. So I think the IWM and the S&P are saying we could have some volatility. We still have this gap to close up here on the IWM. But as also mentioned, that gaps don't have to get filled immediately. They eventually will, but it doesn't have to be immediately. It just kind of feels like maybe with a Fed announcement, the way the markets get volatile, when that occurs, that we could have enough volatility in tomorrow's trade to close those gaps. But wow, haven't looked forward to a trading day this much in a long time, with just a potential 25 basis point rate hike. How is the Fed what are they gonna say about all this banking stuff? Are they going to get into their balance sheet? All that kind of stuff. There's a lot of questions, and I think the Q&A is going to be quite interesting as well. Now, let's take a look at Bitcoin, and holy cow, I mean, this still continues this upward move, and right smack into that wave 5 target at 28,000. And we've been talking about these 4,000 blocks. What is going on here? We were chatting about this in Thursday night's insiders meeting as well. Is it just because we're getting within that year period of when the next halving, people are joking with me on YouTube now because I don't say that or pronounce that word correctly, of Bitcoin, when that's what has historically created rallies in Bitcoin is when that process occurs, and it usually starts around a year before that actual halving occurs. So is that what's going on? Is money running into digital currency instead of the dollar because of the concern with banking? What's going on to cause such a vertical move in Bitcoin? The only negative for me here is the fact that it is so vertical. I wish it wasn't like that for everyone that is rooting for Bitcoin to go long, all you or go higher, all you people that are long Bitcoin. These vertical moves tend to get retraced, and that makes me a bit nervous. I know Zach is excited to see Ethereum with that 1800 print. That's good for him. You've heard us talk about that before. He's in Ethereum, so he's a big fan of that. So he's cheering on this move to the upside. But when we look at the 10-day moving average, you can see where we are here. Separation from the 10-day moving average, big vertical move. We hit the wave 5 target smack in the middle. People have asked, does Elliott Wave work on Bitcoin? Do you have, look right there. Look at the wave 4, 61.8%. Smack on that 61.8% fib level. Where did it go? 100% extension, dead in the middle of the forecasted tap box, time and price projection. So yeah, Elliott Wave works on Bitcoin. It works really well, as a matter of fact. But now, where do we go from here? Do we get an extended wave 5? Is that the end of it? Do we back off a little bit? Those are all questions to be answered. And, you know, if you're just long Bitcoin and you're in it for the long run, it doesn't really matter to you. If you're doing it as a trade, might want to watch closely and potentially take some profits if it appears like it's going to start to come back down from that vertical move. And you know, the next stop is 24,000. We haven't changed these 4,000 blocks that Bitcoin moves in. You can see it came up to 24,000, got turned back. I turned back there in January, blew right through it, tested it just for a couple days, and then exploded up to the wave 5 target. Wouldn't shock me at all to see it come back and test it again. The best thing, if you're long, is you would like to see a sideways consolidation. Just churn here a bit, let that 10-day moving average catch up. You know, even a couple weeks of just churning and processing these gains, some slight backing and filling, that would be the more ideal scenario. You don't want it going vertical from here because that likely isn't going to hold. I'm not even convinced this is going to hold. A little bit nervous about that, but you certainly don't want it going vertically from here either. Let it go through and consolidate these gains, catch its breath, something along the lines of what happened through here. You know, you had this vertical move here, went sideways, but look, see, it still came back down, even though we turned sideways for a while. This is what worries me about this move right here. We're going to find out. So those are my comments along Bitcoin. Let's take a look at some of the international markets. Take a look at the EWA for our Aussie friends, and you can see that, well, back down to 22. We've relabeled now after coming down. This was a wave 5, came back to the previous 4. So the software says, all right, everything that was supposed to happen happened. We finished a wave 5, retraced back to the previous 4. Classic, just classic Elliott Wave. The 5-wave pattern corrects back down. So now the software says, what's the likely next move? Well, it's relabeled now to a 5-wave pattern to the upside. And you have that roughly 61.8% wave 4 here, looking way more constructive on the Aussie market than we have over the past few weeks, going back to the highs that occurred in the end of January. So looks like maybe back on track there, down under. Taking a look at Canada, and no 5-wave pattern currently, so we're still in corrective mode. You can see this huge flat right here, and the support level right here at 32. It held, which is pretty impressive. So there's your flat right there, and now we look to see where do we go from here. Still have to hold 32. There's no current impulsive move. This could have been an impulse right there, but since we came all the way back down to the same level, you know that was simply creating the C wave of the flat. You can look at this zigzag pattern that we had here and down here to the 100% extension. I think I talked about this where I said, be surprised to see it just stop there without going down to the previous 4. It did go down to the previous 4 as well. So all that exactly as planned. Just harder to say what's the next likely move for the EWC. It still has to hold 32, and it's not that far above it. We traded above the 10-day moving average today, but closed below it. So not as strong of a close on the EWC as some of the other markets. And if it can't hold 32, the problem is it probably doesn't even hold there and likely comes down and tests this wave 5 low. But that's all if it breaks 32. As long as it holds 32, it has a chance to set itself, form a new pattern, and then perhaps we have some labeling next week or the week after that, and where that could go. India. So looking at the INDA here for our friends there, and down here we went right down there. We talked. I think this occurred last week as well. So right down here inside this tap box, is that going to be the end of it? Broke below 38, got all the way down. What was the low there? 37.77, and nice kind of bounce off of that low, but we haven't even broken back above the 10-day moving average. So you got to be a little careful here on the INDA. The wave 5 is at a 53% extension. It could clearly go lower than that. The midpoint is a bit lower than where that low was, but it is in the tap box. It's in that forecasted area. Now that box has a range for a reason. It's not saying it has to go down to where the 5 is labeled. It's saying that the likelihood is it will be somewhere in this range. Well, it did. So that could be the end of it. We could break above the 10-day moving average and run back up to this previous 4. That's what will happen at some point when this wave 5 ends. The question is that wave 5 over yet? And for me, until it gets above the 10-day moving average, I remain cautious that perhaps the low isn't in. If it can get back above the 10-day moving average, get back above 39, which was an important low, then we can start to say that perhaps that was the end of the wave 5 and we're retracing back to the previous 4. I just can't go there yet, not with it trading below the 10-day moving average and tapping the 10-day moving average on the high. Let's see how our friends from Germany are doing, and giving a lot of the muscle signals on YouTube when I talk about the German market, because it's not hard to make an argument that it's been the best performing since October. And you look here, this is real classic stuff here, right back down to test that wave 3 high. We talked about that, back above the 10, 30, and 50-day moving average, a little doji there, gapped up, but because it's a foreign ETF, you get a lot of gaps, so don't pay quite as much attention as you would in the US markets. Gaps in the SPY are a little less common than gaps in regular stocks, but gaps in ETFs that trade through ADRs happen a lot. So we don't kind of view them quite the same way. Looking at getting back above all those major moving averages is very important today. Now, can it hold it? Can we stay up there, and can we get above 28? That's when I think that you can really look like, yeah, I think Germany's back on another run here. It has to break this level for me to say that. This looks like a giant trading range to me between the highs at 28 and testing that wave 3 high back in December. So just churning through here makes a lot of sense. If you're long the German market, that's positive. Kind of the same thing I was talking about Bitcoin. This is what you want. You want it to churn, backing and filling a little bit, but pretty much churn sideways to consolidate those gains before trying to make another run. And perhaps the EWG is going to try to break above 28 and make another run, but it has to get above 28 first, in my opinion, before we can take a look at that. So I know we're going to get to the Q&A, and I figured this was going to come up. I just thought I would go ahead and show you this blast from the past here on GameStop. Man, remember when that was all the rage? But after hours, earnings, They were expected to lose 16 cents a share. They made 16 cents a share. So here's where the chart was at the close. Right now in after hours, it's trading at 26.20. It hit a high of 27.50. So you're up in here now with where GameStop is trading after hours on that earnings report. So could be a big move to the upside. And then you look and you can see all of this resistance here. So is this going to bring all the meme people out again, or all the meme traders are going to be all over this? I bet they will. If you're looking at all the chat rooms, etc., I bet you're going to hear about it. The chatter will start again. But you know, I think a big part of that move is done. Can it have follow through from there? That would be impressive. If it could break through this area here, let's just round it up and say if GameStop could somehow get to 30, all right, now you got something going, because now there's nothing in the way. You can see there's absolutely nothing in the way here to get up to those highs from August. But that's a lot of work to do with all of this congestion through here between 25 and 28 or 29 or so. It's going to be right in the mix of it if what's happening after hours holds into the open tomorrow. Just thought we'd have a little fun with that. Haven't talked about GameStop for a while, but good on them. You know, they were kind of smart when all the craziness was happening. They raised money, and appears that they're doing some good things with it. You hate to see they were going to go out of business. I mean, before the whole meme stuff craziness happened with COVID and everything, GameStop was headed for bankruptcy and going out of business. And you know, they've survived, and they survived based on that craziness that occurred. With their price got so high, they were able to raise some money. They were able to shore up their balance sheet and save the business, really. And now they've got money to spend in other areas. If you read what they're saying, perhaps GameStop is around for the future now, when it looked like they were dead in the water. Interesting things, you know, when you have craziness that occurs like that, there's always winners and losers, and they were smart. And so they're reaping the benefits of that. Just pretty interesting stuff there. So I thought I would share that with you. I wanted to show you also Nvidia. This is an alert that we did for our alert subscribers on Nvidia, and we're going to talk about those in a minute, Google and Apple, from our previous TradeFinder case study considerations, but in Nvidia as well. And you can see we made over 40% in 8 days. So here was the entry on Nvidia, and you take a look at it. It was in a wave 3. So in a wave 3 right here at that 240 level, it looked like he was trying to sneak above it. If it could get above that, then we had the potential to move. So not only are we in a wave 3, but we're in a wave 3 with a zigzag. My favorite pattern, really, from a directional standpoint. I've got some favorites from strangles and consolidating triangles, but from a directional standpoint, when you have a zigzag in a wave 3, to me, that's your best probabilities of being able to pick the direction. So looking for it to break above that, and of course it did, and gave us that quick gain. You can see that went a little bit sideways here for a couple days, and then made the break. It actually backed off a little bit, and then there was the big, so it backed off right here, and then there's the big explosion to the upside. Now, when you look at that, you can see it's a little bit overbought now, and you could have waited for a follow-through day. But when you have, you know, it was down 35% on this churning, and then it immediately explodes to where you have a 40% gain, and the whole thing only took 8 days, you're going to take that. Now, we wanted to see Nvidia consolidate this, and it did. So what we did also in our impulse strategy, which are our directionally based strategy, sent out an alert today for an in the money call debit spread. We'll be doing some education, as I talked about before. We had that on Apple too, same trade that we took off today and took the gain. But we added a new one on Nvidia, and here's the chart of Nvidia. It consolidated. See how it kind of went sideways following that big move up? So it consolidated that gain. We have support down here at 240. Likely I mean, the fact that it could come back down and test 240 wouldn't be surprising at all. It looks like the DMI is trying to reset for another run higher. There's the wave 5 target up around 310. So with all this in mind, take a look at the in the money debit spread that we did, a 235, 240 debit spread. I'll go back and show you the chart again. The sell side, you buy the 235, you sell the 240, is right here at support. So Nvidia could come all the way back down to 240. As long as it doesn't break below 240, that trade still makes money. And so you set it right underneath a support area like that, and it functions as it would a credit spread, but you don't have that ugly margin word. You're paying for it through the debit rather than through margin. Now, look what happened is, because after hours, Nvidia focused on, or right at the close, that they're heavily moving into AI. So they had some news on what they're going to be doing with AI. The market liked it. It's up a couple bucks after hours as well. And that's why this all of a sudden jumped up. It's already got a 20% gain because of the expectation is that the stock will be higher tomorrow. Now, whether it holds till the open tomorrow or not, who knows? But you like it when from the time you send out an alert till the close, you're already up 20%. Again, that could all go away tomorrow, depending on whether or not it can hold these gains. But that's, it gives a good jump start for moving. But just wanted to share that with you on, it's become so challenging in this market over the past couple of years to make money directionally with just calls and puts. You still can if you get it exactly right, but the pricing is so weird. And we've had times when we've been right on direction and the options haven't cooperated the way they should if they're going to follow along the mathematical models. And all those models, they're not exact. There's room left in there for volatility movements, for market makers to have some play, etc. But it's been pretty challenging. And I think some of the meme craze has affected that. That's kind of when the time started that things are changing. And what happened during that with the meme guys, initially they're buying the real cheap stocks. Then they started figuring out about options, but on the basic side, buying calls. Then weren't even really buying many puts. Eventually, some people bought some puts, but most people were just buying calls. And the market makers saw an opportunity, in my opinion, to take advantage of some newer traders, newer in the world of options, maybe not enough education on more sophisticated type of option trades. And I think that's all what's played into it. So there's ways to get around that. And an in-the-money debit spread is one of those. So rather than just buying the calls, especially with the fact that Nvidia had already made that move, it's an expensive stock from a fundamental standpoint, but that was a setup there. So I wanted to go through and share all that with you. So looking at our past case study considerations here, we had Google, and we had put on Google and added to it. Or we didn't have to add to it. It bounced back to the upside, but we'd put on Google and already took it off. I'm going to share the Google and Apple trades with you next week, but I wanted to show you Nvidia this week. And you can see that it's rocketed back to the upside. We are a bit overbought now. We can look at this and say, gosh, we took this big move, but you could have waited a little bit longer. But, again, it was a nice trade. You'll see it next week. And now we're overbought. So I don't know that you want to hang in there any longer with that vertical move. It needs to consolidate. It's at some resistance now at 105. So you can call that a no harm, no foul from the entry and move on. Apple setting up here that we looked at on the same day, a little bit of a pullback, and now it's nice new highs. We took that one off today. Also was the in the money debit spread, because we're still in a qualified 5-wave to the downside pattern. Now, that may very well change with the strength of the pattern of the Qs. It's almost disqualified now, 75% wave 4, very close to this going away and being disqualified, but it's not yet. It's not disqualified until it is. And so you keep that in mind too when you're making decisions and you've got nice gains. You want to take those gains. And so we did. And that's what we did. So I think we can cross both of those off. That brings us to MPWR that we looked at on Valentine's Day back on the 14th, and pretty much a sideways consolidation. As I mentioned before, this stock is wild to watch intraday. These bars don't look that big, but it's a $500 stock, so those are pretty big. You get $30 swings intraday. It's wild watching this stock, and then in the end, it's just pretty much where it was when we got in. So I think we'd keep an eye on that one. You can keep that one on if you were monitoring that one. That's something to consider. Then we looked at F5 for a strangle as the market started to get a little bit squirrely. Setting up these strangles made sense, and so you look at that, and false breakout to the upside, false breakout to the downside. You may have heard me say this before. That doesn't happen. You don't get false breakouts in both directions. So what that means is that the triangle wasn't done forming yet. So it's a larger triangle. You could draw the support line there or bring it down here. I tend to like to put it where there's more touches of the line. I wouldn't disagree with somebody that said, no, the support's at 135. Does it really matter in the end? And you can see this high didn't take out that high. So we still have our descending lower highs. It just formed a larger triangle. So certainly no reason to do anything with that. If you're watching that as a strangle, you stay. And you know what normally happens here is it gets frustrating because you got a couple weeks of time decay. But when you form the larger triangles, you tend to get a larger breakout. So it makes up for it in the end. It's just a little frustrating during the interim. And then Amazon back on the 7th of March, also a strangle. And we did this for our alert subscribers as well. And bit surprising that it's breaking to the upside with everything that was going on with the banks. Not in general that it's a surprise that it's going to the upside. Just with all the news, you would have thought that maybe the consumer was going to, tighten up with taking money out of their those banks that were in trouble, etc. But no, Amazon is just powered ahead. Nice breakout, little consolidation there, back above 100 again. So positive 1030 cross. Amazon looks like it wants to move back to the upside. So will that change tomorrow? We'll wait and see. But I like that upward move, and I think we want to see if we can give that one a little bit of time to try and move more. Now, last week we didn't do a new case study consideration, and that was because of the craziness in the market. And we have one impulse result today, and oh gosh, this stock shows up all the time, and it's just not that liquid. It has great patterns. Let's see what this one looks like, but it's not in a 5-wave pattern, so it's in a corrective pattern. So let's take all this other stuff off so we can look at the chart. It lets me know that all the ADX isn't above 20 yet, so it's setting up. But man, this could run like crazy. Look, see the DMI setting up. The ADX has crossed above the negative directional indicator, but it hasn't crossed above 20 yet. So perhaps it breaks to the upside there. If the separation between the two directional indicators is great, you're breaking above resistance here at 80. Already filled that gap back in February. It filled this gap, so no worries there. But breaking above this resistance at 80, if this ADX, and it's if, because this happens a lot, our subscribers know that you go up and hit 20 and roll over. It has to break above 20, but the way it's setting up with the separation from the directional indicators, if that ADX continues up above 20 and those continue to separate, you could have a nice run on EW. Let's look at the options real quick, and we'll see what it looks like. Oftentimes, the options just haven't really been there for this stock. It doesn't really matter, I guess, because it hasn't fully triggered yet, but just curious to see if perhaps more liquidity has come in. Yeah, it is better. You can see that when you're, in the closer months. So March had a lot, but you go out further and the options are very sporadic. That's the issue with it. The spreads are not horribly wide. They are, yeah. I mean, you don't have a whole lot of choices in strikes, but at least the spreads aren't abnormally wide. So perhaps option traders have taken a little bit more favor to this stock than in the past. But this is one that's frustrated me when there's been great patterns and you couldn't put on an options trade. Remember, there's two pieces to it. So what we're going to do tonight to save time so I can get a few questions here, because it's getting late with all my talk, is we're going to make that Nvidia trade is going to be our case study consideration for tonight. We just sent that out to our subscribers today. So just remember that that's an in the money debit spread. And all we need is for Nvidia to stay above 240. That's the key. If it breaks 240, then everything changes. But that's the plan to set up for that position. All right, Zach, stop babbling now and let's take as many questions as we can get.
Yeah, no worries. Thanks for that presentation, Rob. I'm pretty excited about all this Nvidia action.
This is a good day for you. Nvidia and Ethereum are on rolls. Yeah.
Yeah, no complaints today. And we did have a question around Nvidia from Chris, but I feel like you covered that in pretty good detail, even though it wasn't the chart and integrated. I feel like you performed your analysis on the platform, but if you wanted to go back over it quickly, feel free.
What was the question?
It was just around Nvidia.
Well, yeah, I don't know that I can add much to what I've said already. So let's go
Absolutely.
Get some more.
So we'll go over to Catalina, who would like to look at ENPH.
This has been showing up on the ticker a lot, and I figured that we were going to get some people asking about it. So we almost completed this wave dive to the downside. I'll take the DMI off. I don't focus on that as much on downward patterns. We broke below 200. Looked like we were headed down to the tap box, but we haven't gotten there yet. You do have to be encouraged with today's movement on the fact that it broke back above 200. Now it's still in this same pattern here of lower highs. One day means nothing, but if it can put another higher close tomorrow, you could argue that that could be the end of the wave 5, that it's just a short wave 5. 200 matters a lot. There's a lot of support there. Breaking it looked like, all right, watch out below. Talk about this all the time. Big break, no follow through day, and we're right back above 200. So that means this day didn't matter. The follow through is so important. So that's one of the rules that I like to talk about. Now, tomorrow we need to see, can we put on another higher close tomorrow so that we have follow through to the upside, like we didn't get to the downside. And anything can happen with this tomorrow. If it closes higher, I think you're in good shape for a continued higher move. If it breaks back below 200, you still have to come back and bring 160 into play. Tomorrow matters a lot for ENPH.
Absolutely, and across the board. So next up, we're going to go, I see I have a voice question actually from Edwin, but we unfortunately don't have enough time for voice questions in this session. We have tons of questions come in that we're never able to get through all of because of the time constraints. So just across the board, if we don't get to your question, please know it has nothing to do with the validity. We just only have so much time in this session. So we'll go over to Piotr's question. It's going back to the SPY. From the top of the move in August and zigzag down in September, it moved up and closed above 30 and 50 MA, plus 10 MA was curling up, and then downside move. Doesn't look similar right now. What do you think?
The 10-day moving average is, I just feel like any analysis that we got to get past tomorrow. That's my viewpoint. I don't like the gap up today. I wish that wouldn't have happened. We did have a little triangle pattern, a small one inside this big one. My opinion is something significant is about to happen with the SPY. The triangle pattern, I think, remember, in my opinion, trumps everything. It was Elliott's opinion as well, for people that actually read his writings. And this is what I think is so important about the SPY. That's a big triangle. That's over 30 points on the SPY. It's over 300 points on the SPX. Something's getting ready to happen of significance on the SPY. No way to know what direction that's going to be. We break to the downside. That brings us almost exactly to testing this low. You break to the upside and it takes us above these highs here. And then we start looking at, can we make it to those highs? All that makes sense. You can see how even these two breakouts are. So I think any analysis of the SPY other than focusing on that triangle is immaterial at this point in time. Let the triangle do its thing, and let's figure out what the directional pattern is after that. Let's let it break out. Maybe it started today. Again, it has to have follow through tomorrow.
Very well. Thanks, Rob. And this next one you might be able to guess based off of all the crypto volatility.
Tesla?
No, it's close. Coin for Coinbase.
Oh, coin. Okay.
I could
Yeah,
see
well, you kind of left me on that. That could have been a couple things. My first thing would have been Ethereum, but we already talked about that. But yeah, I mean, you get that kind of move out of the cryptos, and of course, Coinbase is going to benefit from that. You had this nice triangle. I believe we talked about this triangle not that long ago, and again, options too expensive here, but that was a well set up triangle and significant breakout. The problem is that's about where the breakout should go. It's overbought right now. It's made its move. That's, you know, this was actually 100% breakout, which happens a lot. We look for 80%. We go to take our profits at 80% on a breakout, but they usually go 100. The last bit of the 100% is usually not as vertical as this. So we're at the point that the breakout was calling for. Now what happens? It's a little bit overbought, and I feel the same about coin as I do about Bitcoin. Is what you would like to see now is some sideways action here. Let's consolidate these gains somewhere around the 90 level, let the 10-day moving average catch up, and then see if we can't break above this 100 level, because if we can, now you really got something going on there. You know, all this stuff to the downside, this vertical move lower here, there's no resistance past 100 to the upside, but it's got to get there first. And it's not going to do it if it keeps going vertical from here. So let's consolidate here around 90, let the 10-day moving average catch up, see if we can break above 100. And then this is something you want to keep an eye on. That could be one hell of a trade if it can get above 100, but it's got some work to do before it gets there.
Absolutely. Next up, we have Jordan. Can you take a look at ZIM? It has a $6.4 dividend on April 3rd. Thank you.
Okay. Yeah. Dividends are always things to pay attention to in the options world for sure. I did want to show Tesla. I figured it's going to come up. Started to type it before. You saw this move today. It's all over the financial networks. After hours today, they're all talking about it and varying degrees on whether or not they think it can break back above 200. But nice consolidation at 180. That was impressive, because we talked about it. If it broke below 180, it was watch out below. Katie bar the door, Zach, but it didn't. It held at 180. Now it's knocking on the door of 200. Can it get through there? So that's what we'll be watching for now. I would say this range between 180 and 200 is really important. And I think I mentioned this before, so I'll say the same thing now. You look to go short if Tesla breaks below 180, and you look to go long if it breaks below 200. So in between, you're just watching it and saying, wow, that was an impressive day. I would have liked to have been involved in that, but now it's smacked its head here. And it just, that's too hard of a trade. So ZIM.
Correct.
And it's right at a ton of resistance. Look at all this. So support, here's the definition of support resistance line, right? So it was support all through October, November, and it broke below it in December, and it's come up and it's been going, using it as resistance through February and March, and holding above the 10-day moving average. Yeah, you got to watch the dividend if you're buying calls, and it does affect the pricing. And if it can break above here, you could have something going, but there's so much support resistance here. 24 is key, and I just wouldn't be interested in going long this unless it could get above 24 with some follow through. Here we go again, though, with if it can make a move. And this is one heck of a consolidation through here. But if it could make a move above 24 and break out of this channel right here of consolidation, is all this stuff through here. Look at that vertical move to the downside. Once again, there would be no resistance to the upside. But for me, it's gotta show that it can get above 26 first. I don't think I'd even be really interested if it breaks above 24 because there's so much congestion there. But a break above 26 and you could have something really good there.
Very
Let's
well.
do one more.
One more. All right, we will go with USO.
Okay. Good choice. And let's see what's happening with oil. And I think that's a positive too. This big move to the downside here was pretty concerning from an economic standpoint in the market, as far as, are we going to go into a deeper recession than's forecast? The idea, obviously, if we go into a significant recession, less demand. So this move to the downside on the whole demand thing, it held there at 60. So there was no free fall. It was a big drop, but it's held. It bounced back up. This makes no difference though, because it hadn't gotten back above its 10-day moving average yet. And I'd make an argument that it really doesn't matter unless oil can get back above 65. If it can get back above 65, then we're talking about 70 again. So right now, it's just, let's watch it. And does 65 act as resistance now? It was support for so long. Is that going to be the resistance line now? It's right where the wave 4 is forecast. Is it going to go up and hit that and turn down? If that occurs, which could easily occur, that's not a good sign for the economy moving forward. All right, everybody, thanks so much for your viewership on all the different social media platforms. We very much appreciate your time. Time's the most valuable asset we all have. And we appreciate when you spend some of it with us. Hopefully you found tonight informative and educational. I thought it was a pretty fun session. Let's see what happens tomorrow. Could be wild. Take care, everybody.